Here all the other transactions which you cannot record in all these books will go to journal proper. We should enter it on the debit side. Date in the date column to Banu account. We had left one line space here. So in that line we will write it as 13,200, that is the difference amount. Hello everyone, I am Dr. Sahana L, Faculty, Department of Commerce, Vidhyaashram PU College, Temple of Excellence. Dear students, in today's session, we will discuss Chapter 4, that is Recording of Transactions 2 of First PUC Accountancy. Now let us learn what are subsidiary books. Subsidiary books are the special journals maintained by the business firms for quick, efficient and accurate recording of business transactions. Each special journal is meant for recording all the transactions of a similar nature. Now we will understand what are subsidiary books. Subsidiary books are called as special journals. They are also journals, but subsidiary books are called as special journals. When the business is big in size, when they have more number of transactions, okay, instead of recording in journal, all the transactions will be recorded in various subsidiary books for quick, efficient and accurate recording of business transactions. Each special journal is meant for recording all the transactions of a similar nature. There are various types of subsidiary books, okay, like purchases book, purchases returns book, various types of subsidiary books are there, okay. All the similar nature of transactions will be recorded in one particular subsidiary book. Followed. Now, why the subsidiary books are used? Why subsidiary books are used in any organization? One is to save time, okay, and the second is to reduce errors. Errors can be minimized when instead of passing journal entries, if they record various types of subsidiary books, errors are minimized. To classify transactions properly. Classify transactions properly means what? All purchases, credit purchases transactions will go to purchases book. All credit sales will go to sales book. Similarly, all cash transactions will go to cash book, like this. Okay, classification of transactions will take place here. And to make posting to the ledger easier, these subsidiary books will help for the posting to the ledger easier. First, a transaction is identified. After transaction is identified, it will be recorded in the various subsidiary books. And looking into those various subsidiary books, it will be posted to the ledger. So, for posting into the ledger, it will be easier. That is why many organizations, big organizations, they prefer subsidiary books. Now, see, as I told you, there are various types of subsidiary books I told. Now, these are the various types of subsidiary books that organizations maintain, that any business firms maintain. Followed. First one is purchases book. This is one subsidiary book called as purchases book. What do they record in the purchases book? In the purchases book, they record all credit purchases. Any credit purchases in the business is there, that will be recorded in a separate book called as purchases book. Next subsidiary book is purchases returns book. Okay, this book is maintained to record the goods returned to the suppliers. Whatever the business has purchased the goods from the supplier, sometimes it will be returned back due to shortage, breakage, spoilage, okay, or else it could be different size, different quantity they have delivered, okay, different size, different shape. It is not according to the requirements of the purchaser. Due to all these mistakes, what the businessman will do, whatever the businessman he has purchased, it will be returned back. So those type of purchases returns will be recorded in a separate subsidiary book called as purchases returns book. Similarly, one more book is there, sales book. Sales book is also one of the type of subsidiary book in which we record all the goods sold on credit. Whatever the goods that are sold on the basis of credit will be recorded in the subsidiary book called as sales book. And in sales returns book, why this book is maintained? This book is maintained to record the goods returned by the customers. Whatever the goods that are purchased from the business by the customer, they will return it back, okay, due to breakage, spoilage, etc. So that time we record that type of transactions in a separate subsidiary book called as sales returns book. Now one more subsidiary book is their cash book. Okay, why this cash book is maintained? That is to record all the cash receipts and cash payments. Okay, to record all cash receipts and cash payments, cash book is maintained. Bills receivable book. Bills receivable book is maintained to record the bills received from the customers. Whatever the bills that are received from the customers will be recorded in a separate subsidiary book called as bills receivable book. The next is bills payable book. The bills payable book is to record all the bills accepted by the business. That is bills payable book. The next is journal proper. Journal proper is also one of the subsidiary book to record other transaction. That means in all these types of, you cannot, whichever thing you cannot enter in all these subsidiary books like purchases book, purchases returns, sales book, sales returns book, cash book, bills receivable book, bills payable book. In all these things, whichever you cannot record will go to separate subsidiary book called as journal proper. Here all the other transactions which you cannot record in all these books will go to journal proper, like opening entries, closing entries, rectifying entries, depreciation. Those type of entries will go to journal proper. So how many types of subsidiary books we have? Purchases book, purchases returns, sales book, sales returns, cash book, bills receivable book, bills payable book, and also journal proper. Now see here, we will discuss about cash book. What is cash book? See here, cash book means what? Cash book is a subsidiary book in which all the transactions, we will understand what is cash book first. Later we will discuss the types. What is cash book? It is a subsidiary book. In our previous slide only, we learnt what is cash book. It is one of the subsidiary book, correct? In which all transactions relating to cash receipts and cash payments are recorded. What all we record in cash book? It is, as we know, it is one of the subsidiary book in which all cash receipts and cash payments are recorded. If we receive any cash, we will enter. If we pay any cash, that will be recorded in the cash book. That means to say, if there is any inflow of cash or outflow of cash, where do we enter? We record in a separate book called as cash book. This is one of the subsidiary book. Now, we will look into the features of cash book. Okay, cash receipts and are entered on the debit side. There will be two sides. One is debit side and the other one is credit side. Okay, so all the cash receipts, that is the money received, are entered on the debit side of the cash book. Followed, whatever the money the business is receiving, where should we enter? We will enter it on the debit side of the cash book. All the cash payments are recorded on the credit side of the cash book. Whatever the payments which we make, whatever the payments we make through cash, all the cash payments will be recorded on the credit side of the cash book. Now we will see in cash book there are various types. In cash book there are various types. One is single column cash book, double column cash book, and third one is petty cash book. In cash book there are three types: single column cash book, double column cash book, and also petty cash book. Single column cash book or means cash book with only cash column. Single column cash book. See here, the name itself it is telling single column. How many column will be there? Single. That means only one column will be there to record the amount. There will be only a one amount column. For the inflow, to record the inflow and outflow of cash, there will be only one column. Next is double column cash book, in which two columns will be there in the cash book. One is cash column and the other one is bank column. And the next is petty cash book. Next, we will learn what is single column cash book. Single column cash book is also called as simple cash book. Single column and simple cash book is one and the same. Now we will understand what in this book. See here, in the single column cash book, all cash transactions of the business are recorded. Okay, what are recorded in the single column cash book? All the cash transactions. All cash transactions means what? If there is any inflow of cash, if there is any outflow of cash, where do we enter? We record in a subsidiary book called as cash book. In chronological order. What is the meaning of chronological order? Chronological order means as and when the transaction takes place in an organization, it will be entered. As and when the transaction occurs, okay, it will be entered in the cash book. It is a complete record. It is a complete record of what? Of all cash receipts and cash payments. All cash details like all cash receipts, all cash receivables, all cash inflows and cash payments, that is outflow of cash, will be recorded. Complete record of cash receipts and cash payments will be there in the single column cash book. Now, this is the format of the single column cash book. Okay, cash book. Date, receipts, LF amount rupees. Date, payments, LF amount rupees. Okay, it is a T-shaped account. This side we call it as left side, that is debit side. This side we call it as right side, that is credit side. Followed? So this is the format. Date, receipts, LF. LF is ledger, folio, receipts. All cash inflows will be entered on the debit side, receipts. Okay, all cash payments will be entered on the credit side. Now we will move into the problem. This is what? Enter the following transactions in simple cash book. Okay, this is a problem of 6 marks. It is a 6 marks question. In your examination, they may ask for 6 marks. Single column cash book problems are asked for 6 marks only. Now we will try to solve this problem. Enter the following transactions in a simple cash book. They have given us few transactions here, right? By looking into those transactions, what we are supposed to prepare? We are supposed to prepare simple cash book. Simple cash book or single column cash book, it is one and the same. Okay. So what we will do? First we will make the columns. First we will prepare the columns. We will write the heading as cash book. Okay. Date, receipts, LF, amount, date, payments, LF, amount, credit and also debit. We will make the columns like this and we will keep it ready. Okay. Now we will enter. See here, 1. What June month 2025, June 1, cash in hand 12,000. Okay. We will record this. Cash in hand means what? That is the opening balance. That is the opening balance. We will record here 2025 date in the date column, June 1. To balance brought down. Cash in hand. How much is the available cash? 12,000. That is not the amount received. That is not the inflow of cash. That is the opening balance. That is previous month's balance brought down for this month. Okay. Previous month balance brought down for this month. This is the opening balance. So for this we will write it as to balance brought down 12,000 in the amount column. Next. 5. Cash received from Banu. Cash received from Banu 4,000. See here, when we are preparing this cash book, single column cash book or simple cash book, we should always think about cash. What is happening to the cash? Whether cash is coming in or cash is going out. If there is an inflow of cash on the debit side, outflow of cash, it is on the credit side. Now in this transaction, cash received from Banu. That means what? Business is receiving money from Banu. Correct. So there is an inflow of cash. Where should we enter? We should enter it on the debit side. Date in the date column, to Banu account 4,000. Next, 10th, purchased goods from Murali, purchased goods from Murari for cash 6,000. Purchased goods. When we are purchasing goods, what is happening to the cash? There is an outflow of cash. That is why we will enter it on the credit side. 2025 June 10 by purchases account 6,000. Next, 15, sold goods for cash 9,000. The business is selling goods for cash. When the sales is taking place, cash is coming in, correct? So we will enter it this side, debit side. 15th, to sales account 9,000. Next one, 18th date, purchased stationery 300. The business is in need of some papers, pen, ink, etc. So the business, what it is doing, they are buying stationery. What is happening to the cash when they are buying stationery? There is an outflow of cash, correct? So we should enter it on the credit side. Okay, 18th, buy stationery 300 in the amount column. Next, 22, cash paid to Rahul on account 2,000. What is the meaning of this? Cash paid to Rahul. The business is making payment to Rahul. The business is paying cash to Rahul on account. On account means here from Rahul, they had purchased something previously. Previously, they had purchased something. Whatever that was previously purchased, it was on the basis of credit. And now they are paying on 22nd, they are paying to Rahul, which was purchased previously from Rahul on the basis of credit. That is the meaning of the term on account. Now they are paying how much? 2,000. Now they are paying means cash is going out, correct? So we should enter it on the payment side or credit side. 22, by Rahul account 2,000. Next, 28th, paid salary 1,000. Paid salary means what is happening to the cash? Cash is going out, correct? So on the credit side, 28, by salary account 1,000. Next, 30, paid rent rupees 2,500. Business is doing what? They are paying rent, okay? When they are paying rent, what is happening to the cash? Cash is going out of the business, correct? So where we should enter? We should enter it on the credit side. 30, by rent account 2,500. Okay, now we have transferred all the transactions, right? That is done. So now we have transferred all the transactions. Now what we have to do is we have to do the total. Okay, we have to do the balancing. For that we will do the total first. Okay, we will draw a line like this. Okay, you leave one line space here and draw lines to write the total. Now you have to check whether debit side total is greater or the credit side is total is greater. Here in this problem, the debit side total is greater at 12 plus 4 plus 9. It is coming to 25,000. This side debit side it is greater. Write 25 here. The same amount you write this side also, and you find out the difference amount. You add all these figures which is on the credit side minus 25,000. So what is the difference amount? 13,200. Correct. Before writing the totaling, we had left one line space here. So in that line we will write it as 13,200. That is the difference amount. Month end we will write 30 by balance carried on. For this amount what we have to write? We have to write as by balance carried on. Which date you will write? Month end, June 30th. The same carried down is brought down for the next month. To balance brought down 13,200. After June, what is the next month? July 1. July 1, to balance brought down the same amount, okay, brought down here. This is how you have to prepare the single column cash book or simple cash book. Now we will look into the second problem. Record the following transactions in simple cash book. Looking into these transactions, we are supposed to prepare the simple cash book or single column cash book. So we will make the columns. First, cash book, okay. Date, receipts, LF, amount rupees, date, payments, LF, amount rupees, credit, and also this side debit. Left side debit, right side credit. We have to write all the columns and keep it ready. Now we will enter. See here. 1. Which month? June 2025. 1. Cash in hand 12,500. Cash in hand means what? That is the opening balance. That is the available balance. So we will write here 2025 June 1. To balance brought down. What is the available balance? 12,500. This amount is what? This amount is the opening balance or previous month's balance brought down. Okay. So to balance brought down 12,500. Next, fourth, cash paid to Hari. Cash paid to Hari means what is happening to the cash? Cash is going out, right? So cash is going out credit side if cash is coming in debit side. Write the date in the date column 2025 June 4 by Hari account 600. Next, 7. Purchased goods rupees 800. Purchased goods. When you are buying goods, when the business is buying goods, what will happen? What is happening to the cash? Cash is going out, right? So where we should enter now? We should enter it on the credit side because there is an outflow of cash. Date in the date column 7. By purchases account, how much money we are paying towards purchases? 800 rupees. So 800 rupees should be written in the amount column. Next, cash received from Amit. Cash received from Amit means what? Cash is coming into the business. There is an inflow of cash. So 12th to Amit account 1,960 in the amount column. Next, 16th, sold goods for cash 800. Sales is taking place. Whenever sales is taking place, what is happening? Cash is coming into the business, correct? So 16th, to sales account 800. 800 is coming into the business due to sales which has happened on 16th. Next, paid 20th, paid to Manish. Paid to Manish means what? Cash is going out, right? So credit side 20th by Manish account 590. Next, 25, paid cartage 100. Cartage means what? Cartage is an expense. Expense paid. Expense paid means what? Cash is going out. Correct. So which side we have to enter? We have to enter it on the credit side. Date in the date column. By cartage account 100 rupees 100. Okay. Next, 31 date, paid salary rupees 1,000. Okay. Paid salary means what is happening to the cash? There is an outflow of cash. So we should enter it on the credit side. 31 by salary account 1,000. Okay. Now we have transferred all the transactions given in the problem. Correct. After recording all the transactions, now we have to do the totaling. Before doing the totaling, you have to leave one line space and then draw two lines like this to write the total. Okay. We have to draw two lines like this on both the sides, debit as well as credit side, to write the total. Now we will add. Okay, 12,500 plus this amount. Okay, we will add. So how much it is coming? 15,250. But this side it is coming less than 15,260. That means to say that debit side total is greater than the credit side. So what we have to do? Debit side total is greater, right? We will write the total in the column. Okay, the same amount debit side total is greater, right? The same amount we should write it this side also. Now we have to add all these amount minus 15,260. The difference amount we have to write it here where we have left one line space, right? So there we have to write the difference amount. For the difference amount we should write it as by balance carried down. Okay, when balance carried down? Month end. That means June 31, last day of the month, that is June 31. Whatever it is carried down, it is brought down for the next month. After June, what is the next month? July 1, to balance brought down, it is 12,170. The same amount, whatever we have written carried down has been brought down here. So July 1, to balance brought down 12,170. This is how you have to do the single column cash book. It is very easy. You should always think, when you are preparing single column cash book, you should always think what is happening to the cash, whether cash is coming in or cash is going out. If cash is coming in, debit side entry. If cash is going out, credit side entry. And the second thing is, you should always think from the viewpoint of the business. Cash is coming in, correct. Cash is going out, that is also correct. But with respect to the business. Okay. So it is a very easy problem. I hope you have understood this. This is how you have to make the columns, and you have to prepare the single column cash book. It is very easy. Okay. Please practice, students. Okay. Practice several times. These type of questions can be asked for 6 marks in your examination. I hope you have understood thoroughly. Thank you so much.